Welcome, everyone. Today, we're doing a deep dive into Praj Industries' latest financials. They're right at the center of the global bioeconomy and sustainable solutions. So if you've been wondering how things like innovation and global challenges actually, play out in quarterly earnings, this one's for you. We've got their press release, the financial statements, unaudited, of course, and their investor presentation right here. Our goal: to cut through those numbers, figure out the real story behind Praj's Q1 FY26, and see what it tells us about, well, the bigger picture in renewable energy.
Absolutely. It's more than just the headlines, isn't it? It's about seeing how market forces, strategy, tech advancements, how they all interact. We'll try to connect those dots for you so you can see not just what happened, but why it matters for Praj and, frankly, for the future of these sustainable industries.
Okay, right, let's maybe start with Praj itself, because they do have quite a background, Indian company, industrial biotechnology, and they've been around for, what, 41 years now?
Yeah, 4 decades. It's impressive. And their reach is huge. Over 1,000 customers,
Wow.
100-plus countries, all 6 continents. That's not small potatoes.
Definitely not.
And what really defines them, I think, is this focus on innovation, integration, delivery, specifically in environment, energy, and agri-process sectors.
Yeah.
There are two big platforms, biomobility and bioprism. They're key to what they do in the bioeconomy.
Right.
Biomobility is mostly renewable transport fuels, decarbonization. Bioprism is more about renewable chemicals, materials.
And they seem serious about the R&D side of things. Over 90 scientists, 400 patent filings. That Praj Matrix facility sounds pretty advanced.
It does. Plus, being a net debt-free company, that's a big plus. Gives them a solid foundation,
Yeah.
especially in these kinds of capital-heavy industries.
Good point. Okay, so the main event. The Q1 numbers ending June 30th, 2025. Consolidated revenue came in at Rs. 6,402 million, which is down compared to last year's Q1. That was nearly Rs. 7,000 million. And it's quite a drop from the previous quarter, Q4 FY25, which was over Rs. 7,500 million.
So year over year, that's about an 8.4% decrease. But quarter over quarter, wow, 25.5% down. That's significant.
Yeah, it really is.
And then there's the profit after tax, the PA, just ours. 53.4 euro million for the quarter.
Oof. Compared to what?
Well, compared to ours, 841 million in Q1 last year, and about ours 398 million just last quarter.
Wow.
So yeah, the percentages are pretty stark. Down 93.7% year over year, and 86.7% down from Q4. That's a massive hit to the bottom line.
It really is. And that flows through to the earnings per share, the EPS, just Rs. 0.29 this quarter, down from Rs. 4.58 last year.
Right.
Operating EBITDA also took a big hit, Rs. 314 million. That's down nearly 66% year over year. And the EBITDA margin, just 4.9%. That feels very tight for this kind of business.
It is tight. Lower margins mean less room for error, less cash for reinvestment. So yeah, definitely a tough quarter financially looking at these headline numbers.
Okay, so the numbers look pretty grim for Q1, but like we always say, there's usually more to the story, right?
Almost always.
Praj's MD, Mr. Ashish Gaikwad, he gave some context. He said there was this cautious approach in the domestic ethanol market. Apparently, hitting that 20% lending target means people are waiting for new mandates.
Yeah, that makes sense. Uncertainty often leads to pauses in investment or project decisions.
He also mentioned the current geopolitical environment and specifically uncertainty around U.S. tariff policies delaying capital spending decisions. So external factors playing a big role.
Definitely. So if we try to break that down a bit, what really drove these shifts? You mentioned the ethanol market caution that led to lower volumes, delayed project cycles. Some customers apparently faced the liquidity crunch too, so they couldn't move forward.
Okay.
Then there were expenses for their Gen X business, their sort of next-gen tech stuff. But without the revenues hitting the books yet this quarter, that drags down profit.
Right, investing ahead of income.
Exactly. And something technical but important. Mark-to-market adjustments on their currency hedges. Forex fluctuations meant they had to book a paper loss.
Basically. That can swing things quarter to quarter.
It can. And finally, they mentioned delays on some big engineering orders at their Kansas facility, which meant higher costs for labor and infrastructure relative to the revenue they booked, pushing those margins down.
So quite a few headwinds hitting them all at once, it sounds like. External and internal issues.
Pretty much sums it up.
But despite all that, Mr. Gaikwad was quite firm, wasn't he? He said, our core fundamentals remain strong, growth vectors are intact, committed to our long-term growth aspirations.
He did. And that's where you have to look beyond the quarter's numbers, right? What supports that confidence?
Yeah, what points to those strong fundamentals when the results look like this?
Well, the big one is usually the order book. That's your pipeline for future work.
Right. And this is where it gets interesting, I think, because even with that tough Q1, their order intake during the quarter was strong, RS 7,950 million.
That's a solid number for intake in one quarter.
And the total order book at the end of June RS 44,480 million. That's a huge backlog, isn't it?
It really is. That gives you visibility, well, potentially several quarters out, depending on project cycles. It suggests ongoing demand.
So where are these orders coming from?
Looking at the Q1 intake, mostly bioenergy, that was 80% of the new orders. Then at purity was 8%, engineering 12%.
Okay.
Geographically, it's pretty balanced for new orders, 55% domestic, 45% export. The total backlog leans a bit more domestic, 62% domestic, 38% export. But bioenergy is still the dominant part, 81% of the total backlog.
So the core business is still generating orders. What about those future growth areas they talk about?
Yeah, they highlighted a few key things. The IRA approval in the U.S., those 45Z, 45Q tax credits. They see that as a big near to midterm opportunity for their low-carbon ethanol tech.
Makes sense. Policy incentives drive investment.
Definitely. And they actually got an order for detailed engineering for a commercial-scale sustainable aviation fuel plant. SAF is a huge buzzword, a potential massive market.
Right. Everyone's talking about SAF.
And they're partnering with IATA and ISMA in India to work on the certification side of SAF. That's crucial groundwork.
So strategically positioning themselves there.
Exactly. It signals that pivot towards these newer, high-potential areas. They also mentioned good progress in Latin America for first-gen ethanol projects, thanks to supportive policies there.
Okay.
And CBG, compressed biogas, healthy interest in plants, and they're talking with BPCL about a joint venture for 10 projects.
Lots of irons in the fire then, despite the current slowdown in some areas.
That seems to be the picture. Growth vectors look promising, even if some of the broader energy transition projects are facing those delays from tariff uncertainty we talked about earlier.
Okay, so stepping back a bit, when you look at Praj overall, what are those core strengths that let them navigate a quarter like this?
Well, first off, their experience. 40 years in industrial biotech is significant. They're seen as leaders. And their tempo model, technology, engineering, manufacturing, project management, O&M, that end-to-end capability is a real asset.
Right, managing complex projects start to finish, that should be an advantage. Although you mentioned execution delays this quarter.
True, and that's a fair point. Tempo doesn't make them immune to external shocks like liquidity issues or policy shifts slowing things down.
Okay.
But what it does give them is the capability to manage those complexities. When things get delayed, having strong engineering and project management helps you adapt, maybe reallocate resources, and ramp back up efficiently when conditions allow. It builds resilience.
That makes sense.
And the diversified portfolio helps too. It's not just ethanol. They do process equipment, breweries, water treatment systems. That breadth cushions them a bit from problems in just one sector.
So the long-term trend towards sustainable solutions is still firmly in their favor, even with these bumps in the road.
That's the argument, yes.
All right.
Short-term headwinds versus the long-term tailwind.
Okay. And just quickly, for anyone looking at this from an investment angle, the share price on June 30th was around Rs 509, market cap about Rs 93.5 billion.
And you noted the volatility, the 52-week range was wide, from about Rs 441 up to Rs 874. So the market's clearly reacted to news flow over the past year.
Yeah, quite a swing.
The shareholding is interesting too. Promoters have about 33%. But foreign investors, FPIs, hold nearly 17%, and mutual funds another 16%. That's significant institutional holding.
Suggests some long-term confidence from the big players.
Often, yes. Institutions usually look beyond just one difficult quarter if they believe in the long-term story and the fundamentals.
Okay, so let's try and wrap this up. What's the main takeaway here? Praj's Q1 results definitely show how sensitive even strong companies can be to external forces, policy shifts, global uncertainty.
Absolutely. The numbers themselves, the profit decline especially, were quite dramatic this quarter. But, and it's a big but, you have to weigh that against the forward-looking indicators.
Like the order book.
Exactly. That very substantial order book, plus their clear moves into these high-growth areas like SAF, next-gen ethanol driven by things like the IRA, and CBG. It suggests they are actively positioning for future growth within this whole energy transition space.
So distinguishing between temporary headwinds and the long-term strategic direction?
Precisely. The challenge is always figuring out how long those headwinds might last.
Right. Okay, here's something to think about as we finish. In this whole energy transition push, we see technology moving fast, sometimes faster than policy or market certainty catches up. So, how vital is it for a company like Praj to keep pouring money into that cutting edge tech, into new markets like SESAF, even when the immediate payoff might be unclear or delayed by these external factors? Is that continuous investment the key to actually winning in the long run?
Hmm. That's a central question, isn't it? Balancing short-term performance with long-term strategic investment in innovation.
Something for you all to ponder. Thanks for joining us on this deep dive today.
Yeah, thanks everyone.
Until next time, keep learning.